Guys, and welcome back to a new video. And as always, if you are new to the channel, a sub would be really appreciated, as I do provide valuable content on a daily basis. And if you enjoy the content, please smash that like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. So it's Sunday once again, where I do some market breakdowns just to give you guys an idea of what you could expect going into the new week, purely based off a technical perspective. So these are the pairs that we are going to look at for this week. A lot of JPY pairs over there. So we're going to start off with Euro USD because it was requested over there. So let's just jump straight into it. So first things first. So on Euro USD, we can see how the market had broken below this last level of support. So there's obviously a pullback expected to that level before the continuation. We can also see how the market printed this overextended information, and by definition, when the market prints in overextended information, you expect a pullback to the left leg before the market continue lower. So we can definitely expect the market to pull back to that level before continuing lower there as well. Now, on the weekly time frame, what do we have? Now we can see based off last week's close, we had the level of resistance. Where the resistance yet got broken, it became support. The market printed new resistance, and we can see based off last week's close, we had a weekly close above the level of support, so we can definitely see that the structure is broken. Now going back here on the monthly time frame, so we obviously want to make sure that we target this level over there. So I'm just going to leave that there, drop down on the daily time frame. So what do I have here on the daily time frame? Now we can clearly see how the market, I've spoken about this area of consolidation that the market had been stuck in over here. So the market was literally stuck within this range, and we can see obviously now last week how the market had broken above this level. Now we can also see once again we had this nice impulse. After an impulse, you expect a correction, and the way you measure that correction is by taking your Fibonacci from the low to the high of the impulse. We can see how the 61.8 Fibonacci is lining up perfectly with the structure that we had in the market. Now after this pullback that we had over here, we can also expect the market to be quite bearish. So the best thing to do is that you can start monitoring price action from where the market is currently at right now. But alternatively, what I would like to see going into next week is some slight of some pullback before the continuation. But if we don't get any continuation in the market momentum just starts shifting and showing to us that it wants to go bullish from where it is now, then I'll definitely start looking for an opportunity from exactly where the price is currently. Alternatively, a drop slightly lower would be good to see as well. And if you want to get an idea of how you can look for a possible entry over here, I've done a video on how you can use structure to look for a possible entry in the market as well. Next in line, what I want to speak about quickly is Gbp Gold. Had some good luck with gold last week, so we're going to start with gold here on the monthly time frame. Now there's not much to speak about gold, because if I do speak about gold, I'm just going to sound very repetitive, because why? I've been speaking a lot about gold, and the market still stuck within this range. There was no clear breakout. We're still waiting for the breakout from either side. So I'm not going to go into too much detail about gold. I will see if we've got some sort of structure going on with time frames. So yet again, you can see over there. So the market is once again just stuck within that level. However, what we can see is that the market had printed this impulse and this correction, so we could potentially see a continuation to the downside, because we can also see how the market is once again testing this very strong structural level in the market. This level over here acted as resistance, got broken, support didn't hold, the market's back to test it as a level of resistance again. Taking the Fibonacci there from the high to the low, we can see how we had a pullback to the 61.8, aka the golden ratio Now, we're obviously expecting Feds with the whole interest rates decision that's going to start very soon as well. So there's a good possibility to continue to look for selling opportunities to that level. Alternatively, as I always say, you have to be reactive and not predictive, and you have to learn to adapt to the ever-changing market environment. If we see some sign of deceleration from where the market is now, we can definitely start looking for selling opportunities to the downside. I also have to monitor the kind of price action that we have around this level before looking for any selling opportunities over there. If anything new comes up, I'll definitely give you guys a more detailed update breakdown like I normally do. Alternatively, if the market does break above that level, then on the retest we can definitely start looking for selling opportunities from a weekly perspective. Now here on the daily time frame, you can see once again the market had just reached this level of resistance. So everything which I've literally explained now still stands. But here on the daily time frame, we do have a contradiction between the weekly and the daily. Why do I say so? Because we can see we printed this massive impulse and we had a correction. If you take a Fibonacci there from the low to the high, you can see how the market had not pulled back to the 0.382 yet. We can also see how the market printed this W formation, came back, tested the neckline. But I would probably be a lot safer if I could probably see a pullback to the 0.382. Alternatively, I still believe that we'll have this impulse and correction to the downside as we identified on the weekly. And the way I would be looking for a trading opportunity on there is we have this level of resistance that got broken that is now turned support. So I'd probably wait for a clear break below this level, then on the retest start looking for selling opportunities. The next alternative way would be for the market to break above this level, a daily close, then on the retest start looking for buying opportunities there as well. But again, I'm in no rush to take any trades, and I think that's why I am profitable week over week as well, because there's no point in rushing trades that we need to take. You have to be reactive and not predictive. Next we got the Euro Jpy. So Euro Jpy starting on the monthly time frame. What do we have over here? Now we can see how Euro Jpy had printed this massive impulse. After the impulse, you expect a correction, and we got that correction. So we obviously expected the continuation to the upside. The only problem that we were faced with was this level of resistance there that the market started rejecting, and the same thing we have here. So the market had also not been broken out of this area over here. Here on the weekly time frame, what do we have? Now we can see on the weekly time frame the market had printed this nice impulse and the correction had started. So there's definitely a possibility for us to look for some buys to that level. Also, the market would then complete this excuse me, this W formation as well. If you take the Fibonacci there from the low to the high, we can see how the market tested, rejected the 0.382, and the minus 27s lining up perfectly with the left leg over there. Now the kind of price action that we got here from a daily perspective is we can see how the market is now currently testing this very strong level over here. Now this level over here acted as a level of resistance. Market broke below that, tested as support multiple times. The market came back to test it as support again on Friday. So there's two ways to approach the situation from a daily perspective. One is we've identified the target level at the minus 27 from a daily perspective. Two, we need to be reactive and not predictive. So we know that this is a very strong structure that the market is currently testing. Now the best way to approach the situation is to make sure that you wait for the market momentum to shift from bearish, because we are quite bearish as it is now, for the market to say some kind of sign that it is ready to start moving to the upside, and then from there you can definitely start looking for buys for the market to complete the W formation as identified from a weekly perspective. Alternatively, if we get a daily close below this level, then you can definitely expect the market to continue lower as well. Now those are the two options. The next one we got over here is going to be Gbp Aud. Now I've spoken about Gbp Aud when the market was there. I explained all of the reasons why we could have expected the sell. I've made that breakdown on Instagram, and then after this sell, I've taken the sell in, then I've taken the buy again. Also, starting on the monthly time frame, we can see how the market is once again testing this level of resistance. Market also printed this W formation, so there's some some pullback still expected on Gbp Aud before we can expect the market to continue lower. We're at that candle there with the long wick, so there's a good possibility for the market to go and fill in that wick first before we can expect the market to continue lower. Now here on the weekly time frame, we can see based off last week close, we can see how the market had broken and closed above that weekly candle. So there's definitely some potential moves for us to look for, continues to look for buys over there. On the daily time frame, we got some very aggressive price action, because if we do look left all the way from where we are, we can see how the market is testing very strong resistance there as well. The best way to approach the situation is to wait for a break above that level. Then on the retest, we can then go look for buying opportunities for the market to go and fill in that wick on the monthly time frame that we've identified there as well. But you need to wait for a clear daily break above this level in order for this move to be confirmed, because the market can easily just melt to the downside as well. Once again, you have to be reactive and not predictive, and you have to adapt to the way the market moves. So we're going to put that there. So wait for a daily close above this level, and then on the retest look for some sells. CHF Jpy. So starting here on the monthly time frame with CHF Jpy, I think it's very clear. Market had broken above this level of resistance, came back, now testing it as support from a monthly perspective. Definitely some continuation to the upside expected, taking off Fibonacci there from the low to the high. We can see how the market had tested and rejected the 0.382, and the market almost hit that target level for that as well. Now here on the weekly time frame, what do we have over here? Now we can see how this market had printed this overextended W formation. When the market prints an overextended W formation, you always expect to pull back to the left leg before the continuation. We also had this nice impulse, and we had the correction. Definitely has some continuation expected to the upside. Here on the daily time frame, the only problem that we got over here is we can see how the market broke below this level of support, and support is now broken, and that support now once again became a resistance as well. Now as traders, we have to be looking for buys in this market from a weekly perspective. There is a good buying opportunities over here, because you know the structure was broken, the market came back to retest it. Also, if you take your Fibonacci there from the low to the high, you can see how the market had tested and rejected the 0.50%, and if we just scroll that into there, that will give us the target level that we are looking to trade over there. So we're going to remove that. Here from a daily perspective, if we are going to look for any buying opportunities, I would suggest that we wait for this structure to be violated first, because this level over here also acted as a level of support. Market came back, tested as resistance. So the best way to approach the situation is to wait for the market to break above that level, come back for the retest, and then start looking for buying opportunities. And where that will take place is exactly, that will take place exactly till there, and then on the retest we can start looking for buying opportunities also. Next in line, what have we got? We got CAD Jpy here from a monthly perspective. As you can see here, CAD Jpy on the monthly time frame is testing and rejecting this level of resistance. The market also broke above this very important structure here, broke back below that, came back, now it's retesting that. All of that resistance is once again support. Here on the weekly time frame, we can see how the market had printed this W formation. So definitely pullback expected before the continuation to the upside. Taking the Fibonacci there from the low to the high, we had not had a pullback to the 0.382. We can see how this wick of the W formation lines up perfectly with the 0.382. Now there's a good possibility for the market to go and test that level before the market continues higher. We can see we had all of these wick rejections over there. Also, just to keep in mind, if you do drop down on the line chart, you can see this W formation a lot more clear. And if you want to get the exact location of where that is, you just need to go and put it right there. So this is the actual location of the neckline. but we need to take this week's into consideration there as well. Now here on the daily time frame, if you're looking for a short selling opportunity, you can see how from a daily perspective the market had printed this structural level in the market over here. Now the best thing to do in a situation like this obviously would be to wait for the market to break below this level. Then on the retest we can start looking for potential selling opportunities to that level over there as well, regardless of the fact that this was identified as the wick. But we want to go and we've identified the actual neckline of the W formation. Also, in doing so, the market would have then also printed this weird looking information that we have in the market over there. And when the market prints an information, you can expect a pullback to the neckline before the market continues lower there as well. Next in line, we got Nzdjpy. Starting here on the monthly time frame. Sorry about that. Let's see what we got here. So Nzdjpy here from a monthly perspective, like I always say that, you know, when the market prints in head and shoulders pattern, the left shoulder doesn't always need to be equally doesn't need to be in line with the right shoulder as well. So this kind of looks like a head and shoulders pattern, but we're not going to go with that. We're going to take our Fibonacci there from the low high to the low, and if we measure the target level, we can see how the market had reached the target level over there. And if we want to go further up there, sorry about that, let me just remove this over here. So if you look at the kind of price action that we got from a monthly perspective, so we can see how the market had broken above this level of resistance, broken above that, came back, broke above that, and it's now testing that level over there once again. So definitely some buying opportunity lurking out over here. And you're on the weekly time frame, we have this nice impulse, and we have had a pullback to the 0.50, which is lining up perfectly with that structure that we had there in the market as well. From a daily perspective, what do we have over here? Now from a daily perspective, we can see how the market, based on the structure that we've identified, we can see how the market is testing this very strong structural level in the market. Resistance got broken, support got tested once, got tested twice. So if it is buying opportunities that we are looking for over here, what we do want to see is we have this level of resistance over there. So the best thing to do is to wait for a clear break above that level, and then on the retest we can then start looking for buying opportunities. Alternatively, if the market tells us that it wants to go down, then that's how we're going to enter the market as well. It all depends on where the daily candle closes tomorrow in the market for us as well. So you have to be reactive and not predictive, and learn to adapt to the ever-changing market environment. Next up, we got the Nasdaq 100. Once again, the Nasdaq here broke above that level of resistance, now testing it as support once again. On the weekly time frame, what do I have over here? So the Nasdaq last week had broken below this very important structure, support, came back, testing it now as resistance there as well. Also taking the Fibonacci there from the high to the low, and just fix that. You see how the market came very close to testing the 61.8 level over there. On the daily time frame, what do we have over here? Now from a daily perspective, we can see once again this strong level of support that got broken, and the market's now testing it as resistance. But there's always a possibility to look for the sells to the downside. I just want to measure something very quickly. So we could potentially see two things purely based on what we get on Monday. We could potentially see the market go and test the 0.50 Fibonacci level before the market continues lower. But like I always say, that it's just good to keep this, and we'll obviously make more updates as we go throughout the week. The alternative option would be for the market to go and hit that level before continuing lower. Why? Because if the market go and hit that level, we will get this head and shoulders pattern in the market, which will serve as a further confirmation for us as well. Then that is basically, I'm going to look at trading the Nasdaq this week. Alternatively, I'm still quite bearish on Nasdaq. Yeah, I'm still very bearish on the Nasdaq. So I will, if the price goes higher, I'll be more happy to sell it even higher. And this is not based off of technical analysis. This is purely based off the fundamentals that is about to come in the week. That's about to come very shortly as well. Gbp Jpy, I've made a full breakdown on this, so I'm not going to speak about it once again. One thing I do want to point out on Gbp Jpy is that I said that we could expect the market to pull back from that level. Now you can see why I always say it's very important that you wait for a clear break below this level, because what happened here on Friday was you can see how the market looked like it wanted to break to the downside. Now if you were one of those greedy guys that likes to buy and sell the market due to structure, you'd have probably seen this level being broken over here, and you'd have told yourself, oh my god, oh my god, oh my god, we're broken just below a strong level of support. I'm going to wait for the pullback, and then I'm going to start looking for selling opportunities. And that's exactly what they did. So they pulled the price lower, and then they brought the price up. So the analysis in general still stands, but what you do want to see is you basically you can use this level is you want to see a clear break below this level. Candle needs to close, then on the retest again we can start looking for selling opportunities, and if you want to see the full breakdown I did on this, that will be 2 videos before this as well. Yes, AUD cat, I've spoken about AUD cat as well when the market was sitting at this level, and I explained all of the reasons why we could expect this market to continue higher, to go and test this level as well. If you want to see that video, that's also a couple of videos before that, so you can go and check that out. I've made a full breakdown on this also. I think the price was sitting here or here somewhere, and I anticipate that this move to the upside as well for those of you that do watch the content. Then yeah, fuck it, my throat's almost gone. And that's Euro USD also. So we've done Nasdaq and gold. So that's what I'll be adding to my watch list for this week, guys, quite fast. So I've decided to keep the live YouTube. So I actually got someone that told me how to do it, but I'm still going to keep it aside because the engagement is quite low. Excuse me, the engagement is quite low um, as well, so I don't get a lot of questions at the moment. So the last thing I want is to go on a live, and then then I'm gonna sit there and speak to myself. So I'll probably start doing the live trading as the engagement increases on the YouTube channel. So as more people come and as more people want to learn, because if I look at the amount of people that I share the content with, if I look at the amount of people that see the content versus the amount of people that actually watch the content, that too just doesn't sit well with me. So I'm just gonna hold off to that until there's some more engagement, until I get more questions from people on the channel. Then I'll reconsider doing that in the future as well. But other than that, I hope you guys have a successful week. Yeah, I hope you have a successful week. And as always, cheers for years.